Okay, you're not going to love this. The IRS just dropped a whole new set of tax rules for 2026, and they're not small tweaks. They're talking higher deductions, new tax brackets, and even changes that could mess with your investments. And if you're part of a queer household, married or unmarried, or somewhere in between, these shifts could hit you differently than anyone else. These updates dropped October 9th, 2025, and they officially go into effect January 1st, 2026. Now, I know taxes are not sexy, but if you want to keep more of your money next year, especially as someone navigating a queer household setup, this stuff matters. Because the IRS isn't just changing numbers, they're changing how your income is getting taxed, how your investments are getting hit, and who qualifies for special deductions. So in this video, I'm breaking down everything that's changing, from standard deductions to tax brackets to capital gains, and even how IRS is treating gold and silver. I'll show you what exactly this means for an LGBTQ plus folks, especially because joint filing, chosen family, and retirement planning look a little bit different for us. Let's make sure that you're set up for 2026 before it hits. Number one, standard deductions are going up. Let's start with the good news. That standard deduction, that chunk of money you get to earn tax-free, is rising again. Deductions for single filers is $16,100. Deductions for married filing jointly is $32,200. Deductions for head of household is $24,150. If you're 65 or older, you also get a little extra. Singles get an extra $1,650. Married couples get an extra $2,500. And here's a limited time bonus. Everyone 65 and older gets an additional $6,000 deduction, but it starts phasing out once income hits $75,000 single or $150,000 married. And it expires after 2028. Real life example, if you're a queer retiree living off your investments, or maybe two partners and in your late 60s planning a soft retirement, that's a real window to save thousands before it sunsets. Number two, new income tax brackets. All right, let's talk about marginal tax brackets. What percentage the IRS takes from each layer of your income after deductions. For single filers in 2026, up to $12,400 is 10% taxed. $12,401 to $50,400 is 12% taxed. $50,401 to $105,700 is 22% taxed, and so on as income rises. For married couples filing jointly, up to $24,800 is 10% taxed. $24,801 to $100,800 is 12% taxed. $100,801 to $211,400 is 22% taxed. Here's the key takeaway. If you're part of a queer couple that files jointly, this setup can either give you a tax bonus or a penalty, depending on how your income stacks. So before 2026, it's worth running the math for both ways, joint and separate, just to see which one actually helps. Number three, capital gains, which are investments, stocks, real estate. These rates apply when your investments grow, like when you sell stocks or crypto for a profit. For single filers, up to $49,400 is 0%. $49,401 to $545,500 is 15%. $49,401 to $545,500 is 15%. Above $545,500 is 20%. If your modified adjusted gross income is above $200,000, tack on another 3.8% surtax. That's the net investment income tax. For married couples, under $98,900 is 0%. $98,901 to $613,700 is 15%. Above $613,700 is 20% plus possible 3.8% surtax. For example, if you and your partner have joint investments, that 0% zone actually nearly doubles. Planning your withdrawals or stock sales around those thresholds could literally save you thousands. Number four, gold and silver are still collectibles. Here's where things get a little messy. Gold and silver aren't treated like regular investments. the IRS still classifies them as collectibles, like art or coins. That means profits on your gold or silver get taxed at your ordinary income rate, but capped at 28%. So if you flip a few gold bars that you've held onto for years, it's not getting that nice capital gains discount your stocks do. Still, 28% is the ceiling. It will not go higher. For queer households, especially those who aren't legally married or who co-own assets with chosen family, these updates matter even more. The way that you title property, split investments, or file taxes can change what brackets you fall under, and whether you miss out on deductions you'd otherwise get as a joint filer. If you and your partner are considering marriage for financial reasons, 2026 might actually shift that equation again. And if you're planning for retirement, understanding where these income cliffs hit could make your Social Security and withdrawal strategy way more efficient. So here's the recap. Standard deductions are up. Tax brackets are shifting. Capital gains stay mostly the same, but thresholds change. Gold and silver still taxed as collectibles. And there's a new temporary bonus for folks 65 and up. If you like these kind of videos, hit that subscribe button, and I'll see you next time.